Okay, so Austin, thank you very much for that. Very interesting and a different perspective than the other businesses on the whole challenge of exporting. And obviously you're a font of knowledge and have vast experience in that area, yourself and your colleagues. We welcome any questions now, so if anybody's got a question for Austin, yes, yourself.
Can I ask you please, I just want to understand more of it for myself. Why are the companies selling on credit as opposed to cash sales?
Well, most companies, that business is grown through credit, and it's not that easy to grow your business unless you're prepared to give credit. But obviously your first protocol is looking for a cash sale. Yes, yeah, and give a discount on a cash sale basis. If you can do that, that's far better. But most of on a business front, most of the actual wholesalers, distributors, merchants, or other companies are not going to pay in advance, and they're not going to pay any other way than, say, on a credit terms. But we do use things like the banking process that does tie that down a lot better. So not every company is insisting on credit, and we would encourage people to actually move away from giving copious credit and looking to a formal process at this stage. So good to do that.
In a way they want to get more sales. So
they want to get more sales, they need to give credit, but maybe in the markets they're looking at. We actually love to be involved with developing markets because it's much easier to get paid in those markets and help our companies, our clients, get paid in those markets because it's understood. A letter of credit is opened, it guarantees payment from the bank, and in turn, once the documentation is in order, they'll get paid. But if you go to the UK, you're going to have to give credit. If you go to the US, you're going to have to give credit.
It's just a common tradition there on the markets.
And cash flow. Many companies now are using their suppliers for their cash flow and to fund their existing business because they're not getting from the banks. So apart from tradition, it's a necessary evil.
Thanks. Thank you. Another question? Yes. At the back.
Just given the budget and the importance that was placed on exporting, I'm just wondering, Austin, would you think that the Irish government are doing enough to grow the exporting sector in Ireland?
Unfortunately, they're not, and it's taken a lot of effort. And Ireland are behind the rest of Europe, very much so in this area. Obviously, they pay lip service to exports, and that's a good start because it's creating that swell of opinion that's really important for companies who want to grow internationally. But by comparison, the rest of Europe gets export credit insurance that Ireland, the Irish government, have decided in their wisdom not to offer and not to support and fund. Okay, so we're in a situation where we're not having that level of SME supports for exports by credit insurance, for one example. I think other things too that might be happening is that the cost base is still very high, the funding is for development is very poor, and there needs to be a lot more done. But I think it will happen. We're seeing it happening, and the important thing is to watch this space for the opportunities and take advantage of them.
Yeah, I think other countries as well, they tie export support, they tie foreign aid to exporting as well. So in the UK, English businesses would provide a lot of the services which were purchased on behalf of UK foreign aid. Maybe you might explain export credit, because I'm not sure if people really understand what it is. And it's maybe something we should ask our politicians in the next call about when they come to us.
In reality, export credit in the UK, ECGD, just a mnemonic, is being used. So UK, the government is helping exporters by guaranteeing the payment for their sales, provided that contracts are in place. So in effect, and okay, they give a credit limit. Now in this day and age, it's very easy to identify in many markets, most of the OECD markets, the customer standing. Export credit insurance companies are really expert at that. The trouble is they've lost a huge amount of money over the last couple of years, and they can't support most of the developing companies at this stage. They're fine for big companies, but not for the smaller companies. So what they're doing, I suppose, in the UK is they're actually guaranteeing payment through a process that's not happening in Ireland. So maybe you've got good contacts in the UK, maybe you've got relatives or whatever that you might help to joint venture your business and manufacture, innovate here, but sell to the UK. It's terrible thing to say, but it's got to be a situation. It'll probably improve over the coming years, I'd say.
And that, as a practical example, so they would guarantee maybe 70% of the cost of your sale. Is that the type of thing they're supporting in the UK?
Typically,
and have for a long time.
Yes, and typically a percentage there might be, and they might allow you, what's even more important, on the back of that, you can actually get funding. So you get a level of funding that, on the back of this guarantee for your invoice. So there is that, which is not easily available here.
Okay. Any more questions, please? There we are.
Question related to that. What is the bad situation then if you're exporting, say, you manufacture in Ireland and you export it to UK, and then from UK you're further exporting outside the EU, or who knows? What's the bad situation then? Are you then, who pays the VAT?
And it's the situation, the VAT, did you say? VAT? Okay, for VAT purposes. Okay, you're selling to the UK. And in that situation, obviously, you have to have the UK VAT registration number of your buyer, of your customer. That way, you don't have to charge them VAT, and that's accounted for. But you have to prove that you've got the right VAT number, and it's an easy process. Once you get their VAT number, their revenue, VMA in Dundalk or revenue online will have a system that simply allow you to key in that number, and it will verify it's that company name and address. Now, so that's one stage. If they don't have a VAT registration number, then you have to charge VAT. There are some minor sort of like limits, but in reality, you have to charge VAT, and then that's a penal situation that you're charging VAT and you're having to increase your price as a result. So they shouldn't have to pay the VAT if they're VAT registered. They in turn are selling outside Europe from the UK. Well, then they should be able to prove the export outside Europe and not charge VAT. But it's a good process, yeah.
Okay.
Is it beneficial for Ireland or UK to sell that way if you have an alliance with etc.?
Probably is, and Ireland probably are a little bit weak on the sort of the knowledge and of many of the Commonwealth markets that the UK distributors are much stronger in. So I would use the partners, and we find that how many goods come into Ireland from the UK when they could come directly from Brazil or wherever, because the distributors, the wholesalers are set up, and vice versa, identifying that where there's an acceptance of the product, of your product, it doesn't have to, it may ship to the UK, but it could go further afield. So it's worth exploiting that. Yeah.
Pricing for consumer, for the end consumer.
There's obviously additional costs, and that's the downside. If you were to go directly to the market overseas and to ship directly to those markets and agree terms with them, you're saving the middleman's margin. But sometimes it's much easier at this stage of developing your products to go through the sort of wholesalers, distributors that are there already.
Okay. I'll just wait. Greg, could you come down, please? It's fine. Yes, we'll take your question.
I have a question. Would you consider there's a company wants to set up a headquarters in Europe, and now if Ireland is an option, would you consider that as a export, export service or whatever?
In terms of Ireland being a useful sort of launch pad for exporting.
No, for example, a car manufacturer, they want to set up a headquarters in Europe.
Okay.
But instead of choosing France, instead they choose Ireland as a base. Would you consider that as an export?
It's actually a good question, because this a really interesting question, that this is happening, and this is the strength of Ireland to a very large extent, that multinationals are using Ireland as their base, as a headquarters. They're not manufacturing in Ireland, they're not shipping from Ireland, but they are actually managing all the compliance issues, all the sales order processing, and all the cash. They're taking the cash through Ireland, and that's a good reason. So it is a very good reason, and companies are setting up in Ireland to benefit from the tax breaks, and the success of the Irish market, and the people in the Irish market know what they're doing. So that is very successful, and it's worth looking at. And I think for most people here, if you've got a great idea, look at others, people, and look at the companies that are doing very well, and maybe gain more experience if you can in the interim until you've got your product launched, you know.
Thank you very much. Okay, I think we're coming towards the end of the day. I'm going to say thank you very much to Austin. So thank you again.